Hi, folks. Welcome back to our Forex Trading, Forex Intermediate, episode 11. Today, we are going to look at the two technical indicators, Bollinger Bands and the Parabolic Cell, that is stop and reverse. In our today's lesson's objectives, we are going to understand what Bollinger Bands are. You'll be able to know how to use Bollinger Bands to determine your entries and exits. You'll also be able to understand Parabolic Cell. You'll be able to know how to use Parabolic Cell in determining your entries and exits. When we talk about the Bollinger Bands, this is a technical indicator that is used to show the market's volatility. It falls under the trend indicators. With Bollinger Bands, it will indicate whether the market is volatile or the market is quiet. When the market is volatile, you'll see the bands expand, and when the market is quiet, the bands will contract. Bollinger Bands behave or act the same manner as like resistance and support. I'll be showing you in details how to use Bollinger Bands when you are trading. But in the meantime, let's look at the other technical indicators, that is the Parabolic Cell, whereby Cell means stop and reverse. So with the Parabolic Cell, it helps determine the end of a trend. This is also a trend indicator. It uses dots on chart to indicate potential price reversals. And when these dots are below the candle, they act as support and it could signify buy signal. When the dots are above the candles, acting as resistance, it could signify sell signal. So I will take you to the charts whereby I'll show you how to use the Bollinger Bands and the Parabolic Cell when you are trading in terms of getting entries and in terms of determining your exits. So let's go straight to the charts. So this is the chart. Today I'm using MetaTrader 5 because I want to expose you in both MetaTrader 4 and MetaTrader 5. This is my demo account for the MetaTrader 5. And in this account, in this demo, I'll show you how to get the indicator. So we are dealing with the Bollinger Bands and the Parabolic Cell. So you'll come to insert. You can see where my cursor is at insert. Then indicators. You can see the indicator. Then you choose, you go to the trend. And then under the trend, you'll be able to see the Bollinger Bands. Here is the Bollinger Bands. So we choose Bollinger Bands. And with the Bollinger Bands, we have 3 bands. Okay? It has 3 bands. So basically, we will use Bollinger Bands. We apply the close option. And now we click OK. So once you click OK, the Bollinger Bands appears on the chart, as you can see. And you can change the color if you want. You come to the properties, you click on any band here in the Bollinger Band, then you choose properties, and then here style, you can choose any color you want. You can also increase the viewing or the wind of the band so that you can see them clearly. So then you click OK. So as you can see, I've increased the visibility of the bands. So from this point, I want you to see the bands at this point. With the Bollinger Bands, I said that they have 3 bands. So this is the lower band, this is the upper band, and then we have the middle band. Okay. So Bollinger Bands, we have what we call Bollinger Squeeze. So the Bollinger Squeeze, these may occur where the bands squeeze together. Like for instance, at this point, where my cursor is, you can see these bands are squeezed together. They are close to each other. So this is Bollinger Squeeze. And when Bollinger Squeeze happens, it signifies a possible breakout is about to happen. Okay, it signifies a possible breakout is about to happen. And if the candle starts to break from the top of the band, the move will usually continue up. So like this one, you can see there was a squeeze and the candles began to break on top of this upper band. Okay, they began to break on the upside of this upper band. And this signifies that you take your trade in the direction of the breakout. Okay, you take your trades in the direction of the breakout. So I'll be able to illustrate the other scenario, whereby the other scenario, it's when the Bollinger Bands break on the lower band. Okay, so you can see here what happened. This was a squeeze. There was a squeeze, and the Bollinger Bands began to break out on the lower on the lower side, and below the lower Bollinger Band. Okay, below the lower band. So this means that you take your trade in the direction of the breakout, and for here you needed to take a sell in the direction of the breakout. So basically with Bollinger Bands, we have what we call the Bollinger Squeeze and the Bollinger and the breakout, Bollinger breakout. Okay, so if we just see, we scroll backward to see how the market is behaving. You can see here we have the Bollinger Squeeze. Okay, we have the Bollinger Squeeze. So with the Bollinger Squeeze, you'll find that basically this is when the market is ranging. We learned about the ranging market. So here the market is basically ranging. And with the range market, the reason why the Bollinger Bands are close to each other, and this we call it Bollinger Squeeze. So here you can just trade using the idea of consolidation, whereby maybe you can take your sell from here and then you take your profit at this point. Okay, so basically what I want to illustrate here is how to have your entry. We said after every squeeze, after every Bollinger Squeeze, there is a breakout. Okay, and you can see this candle broke out in the upper direction on the upper band of these Bollinger Bands, and this signifies to you that you take a buy entry. And after that, you can see the market went all the way up in a buy in the uptrend. Okay, but I want you to understand one point. Let's come back to this area. Here was a squeeze, right? And this squeeze, the market broke out. It was a sell. Therefore, it broke out on the sell side. Therefore, you needed to take a sell entry. But when you took this sell entry, let's say you take the sell entry, and at the moment you start to see the squeeze happening, then it tells you the market might break out on either side. Therefore, you need to take the squeeze will signify to you that you need to take your profits, that if you are in a trade already. So you want to take your profit or you want to exit at this point. That is, if you took your sell from this breakout, then you need to exit the moment you see the squeeze begin to happen, because it signifies that the market will break out in either direction. Okay, so the same case that happened here. So here there was a squeeze, there was a breakout in this direction, in the upside direction, and the market bought. So the moment now you begin to see another form of squeeze happening, then it means that you need to take your profits. You need to exit at this point. Therefore, that is how you use Bollinger Bands to determine your entries and to determine your exits. Okay. And like I said, it's good to always not rely on one indicator. When you're using indicators to trade, always ensure that you're not using a single indicator. It is best to use at least 2 or 3 or more indicators so that they can all confirm, meaning that you'll be having a high probability entry. Okay, I believe that point is pretty clear. Then we have the second indicator, that is the Parabolic Cell. Again, you come to the insert option here, then you click indicators, and then you go to the trend. Parabolic Cell is under the trend indicators, and here it is. So you click that, and then we use the default settings. Visualization is okay in every time frame. Then we can change the color. Let's say now we use color yellow, and then we want to increase the visibility of the dots. So you click OK. All right. So you can see the dots. Here are the dots. Here is the parabolic cell. So you can see it in the chart. With the parabolic cell, we said that when the dots are below the candle, it acts as support, and therefore you look for buy entries. And when the dots are above the candles, I will repeat. When the dots are below the candles, they act as support, and therefore you look for your buy entries. When the dots are above the candle, they act as resistance, and therefore you look for your sell entries. Okay. So in this scenario, we have the dots forming below here. So initially, we have, let's begin at this point. So this was a downtrend, okay? And you can see the dots now began forming below the candles. So this signifies to you, the moment you see these dots starting forming here, it signifies to you a possible reversal. Okay, it signifies to you that there is a possible reversal, because you can see we were in a downtrend, and then this in a downtrend, the dots are forming above the candles. Then when we reached at this point, the trend changed, and now it's an uptrend, and the candles are beginning to form below the dots are beginning to form below the candles. So at this point is when you begin now to look for your buy entries. Okay, this is when you begin to look for your buy entries. And again, if you are combining the parabolic cell with the Bollinger Bands or any other indicator, for this case, let's use Bollinger Bands because this is what is in our chart. So you can see with the Bollinger Bands, this is a squeeze, and the market broke out on the upside direction. So this signifies to you that you need to take buy entries. And the same case, the parabolic cell the dots begin forming below the candles, signifying to you again, this is an uptrend, and you need to look for your buy entries. Okay, so once you take this buy trade, and you reach a point whereby now the dots are forming, began to form. Many dots have begun to form on the other direction, on the upper side of the candles. So you know that the trend is changing. Okay, you know that the trend is changing, and at this point you need to take your profits. Okay, so once you take your profits or you exit the buy trade that you are, now you begin looking at the sell setups or sell positions. And again, at this point, you can see the Bollinger Bands, they squeeze and they break out on the sell side. And the parabolic cells, the dots have begun forming on the upper side or on the upper part of the candlesticks. So this is a second confirmation that it's a sell entry and you take your sell, okay? So basically, that's how you are able to use the parabolic cell. And one thing that you need to notice that when the dots shift from forming below the candles during an uptrend. So this is an uptrend. They are forming below the candle. So when they shift or they change from now forming on the below the candles and they begin forming above the candles, so you know that now the trend is changing. Okay, so it shows a reversal, and you need to if you're in a trade, you need to exit. If you're in a buy trade, you need to exit and now begin looking for sell trades. Okay, so this marks the end of technical indicators, And like I said, we have many technical indicators. Some are very much available for free in your chart. Others, you'll find that there are people or traders who customize indicators and they sell them at a price, okay? But for me, I would encourage you to, first of all, take advantage of the free indicators provided in your MT4 or your MT5. Ensure that you know how to use them, you master them, and basically, especially for the 6 indicators that you have covered, these indicators are high probable, and ensure that you don't use a single indicator. Always ensure to combine at least 2 or 3 or more of indicators so that they can all confirm to you, meaning that the trade you're going to take is a high probability trade, okay? So the six indicators, technical indicators that I gave you, they are very critical. Ensure that you learn more about them. Ensure that you practice. The only secret to succeed in Forex is practice. You might watch the theory, you might watch videos, you might read the theory several times, many times, 1,000 times, but without going to the chart and back test and practice using them, it might be in vain or it might be challenging to you. And therefore, you need to put in more effort on your side to ensure that you practice as much as possible, to ensure that you perfect your entries and you also perfect your exit. And by practice, as the old saying goes, practice makes perfect. So when you practice, it means that you'll perfect your game. So this marks the end of our Forex intermediate class. And in our next lesson, or in the next lessons to come, we shall now be looking at Forex Advanced. So we are almost about to wind up the entire Forex trading course, and I believe that you are getting value. I believe that you're getting value. In case you have any questions, drop them in the comments, in the comment section, or you can join the Telegram group and ask me any questions, any support that you might need in terms of your trading so far. Remember, my key goal is to ensure that you are able to trade and at least make some money. You can either decide to do it as a side hustle, you can decide to do it as a full-time, depending on your availability. But the key thing first is to get the concept, okay? Remember, I said when I began, the key, if you want to excel in Forex, the first thing you need to do is to tell yourself that you want to become a successful trader. That should be your number one goal. Don't look at the money aspect of it. If you go with the money aspect of it, you might not end up performing well. We know at the back of our mind, we are coming to trade to make some money, okay? But for now, because you are a beginner, just tell yourself that you are coming to learn how to trade so that you can become good at it, so that you can become a professional trader. And if you become good at it, if you become a professional trader, it means that money will follow you, okay? It means that money will follow you. So guys, ensure that you like, subscribe, and share the link so that also others can benefit. Thank you so much and see you in the next lesson.